Gifting crypto? It's not as simple as clicking send. In this video, I'm going to be sharing with you all the need to knows about gifting crypto to family and friends in the US. My name is George Shakro. I'm a crypto tax attorney here at the Gordon Law Group, and I've seen countless clients send and receive crypto from family and friends not knowing the tax implications, just asking for IRS issues and inquisitions. Let's break down the rules to gifting crypto in this video. First, we need to determine the value of the gift. Crypto is considered property, so when you're transferring it, the value of that property at the time of transfer times the total amount transferred is the total value being sent. For example, if you're sending 10 Ethereum and the value is $2,000 each, then that gift is worth $20,000. If the gifts from one person to another individual total less than $16,000 during the tax year, then it does not need to be reported as a gift. If the gift during the tax year exceeds the $16,000 annual exclusion, then you need to fill out Form 709, properly reporting the gift to the IRS. You won't need to pay gift tax until you've reached your total lifetime gifting limit, which is $12 million. Most people won't get anywhere near that. Form 709, or the gift tax return, is due with your regular tax return, April 15th for most people, or if you extend it all the way to October 15th. So what do you do if you receive a gift? One of the most important things is record keeping. When a gift is given, a donor has to provide a gift letter to the recipient. This should include the donor's intent that the gift has no strings attached. It should also include their description of the property. In this case, what we're talking about is crypto. So what assets are being sent over, how many of the assets are being sent over. The most important part is also communicating the cost basis of the asset and the acquisition date. This will help the recipient determine how much to pay tax when they sell that property. When a donor sends a gift to the recipient, the FIFO method is applied to determine what the cost basis and acquisition date of that property is. The recipient then uses that cost basis and acquisition date to determine their tax liability, whether it's short or long term, and whether they have a capital gain or capital loss when they sell. In terms of NFTs, it's very hard to determine the market value of an NFT, but you can always determine the cost basis of an NFT. So the safe route is to always make the gift for the cost basis or the purchase price of the NFT. Another issue we've seen very often is clients receiving gifts or giving gifts to somebody else to trade for them. Normally, this would probably be considered some sort of partnership, but in this case, it's a bit loose to even consider it that. The thing you should know if you're receiving or giving cryptocurrency for someone else to trade is that any capital gains that they get while trading or while you get while trading someone else's cryptocurrency all belong to you. There is no way to make that somebody else's capital gains. It's important to know that a gift and a donation are two completely separate things. A gift is sending property or money to a family or friend where you don't have any expectation of being paid back or given anything for the gift that you're giving this other person. The difference is a donation is being sent specifically to a charity organization. When donating to a charity, it's also important that you need an appraisal for anything you're donating. So any crypto that you're donating needs to be appraised for you to take a deduction. If you have any more questions about gifting crypto, comment below your question. I'll try to get to it in the next one. Make sure to like, comment, subscribe, and check out our other videos. There's plenty of tax cryptocurrency content, so feel free to figure out everything you need.